Deven Choksey as well is joining in on the show. Deven, why don't I start off by getting in your thoughts? A lot of long-term growth projections, profitability targets that have been divulged yesterday by the management of Pyramal Enterprises, but brokerages still erring on the side of caution, and they've maintained an underweight rating or an underperform rating. What's your view on Pyramal Enterprises?
Good morning, Evan. Well, obviously, I think the roadmap is basically made very clear, and that is a good part because generally, I think this is expected that whenever the company's business model is basically showing some signs of a growth and management gives clarity on the top of it, that gives, I think, good amount of confidence. Uh, I'm not too sure about, I think, how market reacts, I think, immediately on such kind of announcements. But in my viewpoint, I think if you are looking at the long-term view on the business of the company, then probably I think you got required clarity from the management of Pyramal Enterprise. And given that kind of a situation, I would rather think that one could possibly keep counting on the possibilities of how exactly they will implement some of the initiatives that they have talked about. And given that kind of a situation, I think long-term investment point of view doesn't change, but at the same time, more clarity which has emerged, which can possibly be implemented in the portfolio over a period of time. Immediately, we don't have any recommendation on this particular stock, but as we are looking into the company, we find that I think the merits are demanding to look into this company from the point of view of adding into the portfolio.
Deven, what did you make of Reliance's AGM? While the focus sure is on the long-term value creation, but it sort of fell short of, near-term unlock expectations that perhaps the market had.
So likewise, I think the AGM has also given a good amount of clarity for the growth in respective verticals. I think the star of the entire communication, probably I think the vertical, which is geo platforms, uh, transiting from a mobile company to a complete technology company is a narrative which the management has set for this particular business. And that inspires the confidence because on one side you have low hanging business of mobile telephony, which is anyway generating about 1,20,000 crore worth of revenue and 50,000 crore worth of EBITDA. Now, this particular business is getting transformed to a complete home solution business in which you have different verticals in it. I think be it the media, the entertainment, e-commerce, education, healthcare, gaming. Each of these verticals physically, I think, are being given the complete direction. I believe that I think because of the home connections getting included into the expansion program, this is going to probably result into higher amount of uh, consumption of data and at the same time, I think business for the company. Along with that, the enterprise solutions are also being talked about. And in that, I think the technology blocks, they have about 14, 15 different technology blocks on which I think the company is operating currently. And for the enterprise solution, along with the cloud computing, along with AI, AGI, the artificial intelligence, along with MR, AR, MR. I think these are some of the technology blocks, I think, on which the company has already talked about opening up this particular thing for application development. In my viewpoint, I think Geo platform could possibly show the double the amount of revenue and the profits in next 2 to 3 years time. And that is where probably I think one could argue that as against I think normal growth of doubling the size in 4.5 years, now the company is talking about doubling the size in Geo platform in 2.5, 3 years time. So which is fundamentally sounding absolutely very good music to the ears, actually, if you ask. Along with that, I think the other areas of business also being talked about very systematically, particularly in the renewable segment. All the five verticals in the renewable segment are given a separate group, along with compressed the biogas business, I think, which is now taking off the ground. So in my viewpoint, I think this is one area where again I think you are going to see larger growth. But I think on the other side, if you are looking at near-term outcome into the numbers, they are not going to be very dramatically changing immediately. Maybe I think if the roadmap is suggesting that the company could grow faster into consumer-facing business, which is the Geo platform, the retail and Geo financial services. these businesses could possibly grow, I think, at a compounded rate of growth of around 20%, whereas oil to chemical and oil and gas exploration business, I think, could grow in the vicinity of around 10 to 12% kind of a growth rate. So this is what I understand from this particular company. Maybe long-term outlook is clear. Immediately, one will have to take an opportunity to buy these stocks when the market gives one at the lower prices.
Meantime, Deven, wanted to understand what your outlook is when it comes to the entire non-banking PSU basket. If you had to pick and choose stocks within the power space, defense and railways, which would they be?
And I think I always maintain that the PSU companies are great businesses, and I think the models are absolutely, I think, robust. Up till now, I think these companies have been suffering largely because of inconsistency of the commitment of the management, and largely due to the fact that I think in PSU companies the management changes I think would take place very frequently. Given the situation that in current environment, government is spending maximum amount of money on infrastructure building, and given the situation that the government is putting equal amount of emphasis on bringing the accountability into the PSU companies, I would think that I think at least I think those gaps which were there up till now, I think they are getting corrected in PSUs, and that is where I think one could argue that higher amount of order intake for the PSU companies, given the kind of expansion that the government is making in the economy on infrastructure side, and given the fact that there is higher amount of accountability of the management, some of the PSU companies could possibly show relatively better performance going forward, and hopefully it will be consistent and sustainable. So if that is so, then some of the PSU companies, I think, which are so, I think many of them have already done up ahead of time. They look promising from the point of view of investment. And I would believe that I think the companies connected with capital goods segments, companies connected with infrastructure segment, railways and defense definitely I think I was giving a larger amount of trust, but with a lower margin. So they also look reasonably good. But more importantly, I would be very keen to look at companies which are in the mining space. I think the companies in the mining space could possibly show relatively better performance, given the kind of thrust that the government is putting across on this particular subject. So overall, it appears promising. Maybe one will have to remain selective instead of generalizing the entire PSU baskets.
There is finally an upgrade on PVR. Better than expected movie performance. Content pipeline remains strong and healthy for the mid-October festive season. Diversified content reducing cinema risk. It's like this trend within a trend, the footfalls and the moviegoers. And trust me, for the last couple of movies I've gone for, you can feel the vibe. वो पहले हाउसफुल का जो बोर्ड लगता था, you can actually see that. Yeah, it's like old times 3 to 6, 9 to 12, the traditional single screen experience or movies we went for. If the show was full, they would actually put a houseful board outside.
Except now you're shelling out thousands for popcorn versus what we did years
And of course, then there's no houseful board because you don't go there because you're online, that tickets are not there. Yeah. But it is such a big change which has happened. It is such a big change.
Yeah, but it's unfortunate that it's so content specific. Yeah. I mean, even the stock moves up when you have a hit movie. So, it's almost a box office indicator now, the stock.
There's cyclicality actually in that business. But now the thing is, it becomes the go-to stock because there's only one because of the merger of PVR and INOX. So could this be one of those concept or consumption stocks where you would say, I want to buy it on a bad patch, or I will not buy it because Cricket World Cup is around the corner. So I don't know what will hold true. But all I can say is that if there is one trend, there's one trend which is clearly visible, I think is the moviegoers and the footfalls. Interestingly, a lot of multiplexes are also in malls now. So could this lead to an uptick in mall footfalls? I mean, picture dekhne jaoge, you'll end up eating, you may end up just going to the restaurant in the mall, maybe a little bit of binge shopping, window shopping also. But Phoenix Mill in that same breath, let's look at the 1 month change, YTD change, 1 year change. I mean, Phoenix in a sense is the largest independent listed mall player, I think, in India. 1 month change 4%. This year Phoenix Mills is up 25%. Deven Choksey, could Phoenix Mills be a good idea?
Honestly, Nipun, not even given that particular thought in that much of detail. Only thing that I find very interesting is that I think the kind of small properties that they have been building, and at the same time the brand that they have been attracting, it suggests that I think they are at the premium end of the business, and probably I think they should continue to sustain. But as I said before, I think haven't looked into the valuations at this point of time, and neither looked at I think the projected financials for the company. So different from giving any outlook on the subject at this point of time.
Deven, just wanted to get your sense in on Zomato, PB FinTech, way off from their, last year lows, but do they make for good buys now at these levels?
So I think a couple of things are happening. Those investors who have been wanting to exit the company, they are exiting now. And as a result of which, I think that overhang, which was up till now affecting the stock price, is slowly and gradually receding away. That is a first technical point. On the other side, the fundamentals of these companies have started showing some amount of improvement, and to a greater extent, I think one would say that because investors started asserting about the profitability of the business, the managements have also, I think, remained vigilant about spending money. And as a result of which, I think one is seeing the good amount of corrections in the strategy, and the profit is given the first preference vis-a-vis, I think, growing the size of the company. So I think that is giving a good amount of confidence, particularly likes of Zomato, where I think the corrective strategies are taking place. Undoubtedly, the potential remains very large as far as I think the business is concerned. But whether I think they would be all converted into the profits in a near future, I think one will remain a little bit thoughtful about it. They recently started, I think, the newer revenue model, which suggests that I think on every order they would be collecting the fees, which is probably, I think, giving some kind of a promise as far as I think the outlook is concerned. But whether that fee would be meaningful in next couple of quarters, I'm not completely sure. However, having said that part of it, I think this businesses looks interesting. They've scaled up, they've put across the technology to the front, and I think they are now showing the signs of, I think, registering the profits. Though the other valuation parameters and the earning outlook, or earning ratios rather, I think would take little time, I think, before which I think one could count them completely into it. But at least the downside is protected now, as I see it.
Deven, what is it that you make of possible turnaround stories like Indiabulls Housing, right? They've already repaid over 2,200 crore rupees as of last week. They've cleared all $3 billion of ECBs as well. And from what we understand, not just they're looking at a name change, but they've also applied to the regulator to become an NBFC. Do you think this is a case that one could look at?
Well, honestly, I think the kind of restructuring moves that they have taken, they are suggesting that they are in for some serious business turnaround, and that is what definitely I think given the kind of changes that they are making. However, how much impact it will bring in the near term to long term, I think I'm not very clear at this point of time. Maybe furthermore deep into the subject will be required before which I think we can comment on this subject.
Deven, what should one do? Look, you got this great rally. I'm not using the word frenzy in PSUs. The temptation to not sell, I think, is there because you may miss out on the absolute gains. But if you don't book now, how is the risk-reward ratio stacked up for PSUs in general and railways and defense specifically?
So while undoubtedly on one side the huge amount of potential for this company exists, and given the thrust of government on infrastructure spending, I think most of these companies are right in the middle of having significantly large amount of business execution possibilities. So there is undoubtedly, I think, this kind of a great opportunity that one can talk about. However, I think in the near term, if the stock prices peaks out faster, then possibly I think it will languish for a longer period of time. One important aspect is that I think most of these PSU companies, they work on a very tight margin. And if any slippages are there in the operations and the performance, probably I think you have a disappointment on the earnings front. That is one particular caution that one would like to exercise. At the same time, I think today, if I see year ahead, I think as far as I think the election 2024 is concerned, in my report, I think this 1 year time, which is likely to remain, I think, extraordinarily buoyant market condition for India markets particularly, in which most of the laggards are likely to perform. And that could be an opportunity if they somehow or other, I think, start picking out on the valuations. I think it would be an opportunity to cash them in subsequent period of time. I'm not in hurry to do that rather, but I would rather keep an eye on it somewhere in 2024, end of the first quarter or in the beginning of the second quarter. I would rather like to, I think, book profits into some of these companies which are rallying faster compared to their earnings. That would be the opportunity time at that point of time. As of now, it makes sense to stay invested into this company, given the kind of swing that we are experiencing in the business condition that these companies are at this point of time.
Deven, thank you for taking time out and joining in.